Hello, everyone. This is Si Wing Yi from the Yi Real Estate Network. Thank you for attending this presentation. I have invited our Southwest Florida network realtor, Justin Zatwani, back because he has some urgent information he needs to share to our real estate investors, and because we feel that the real estate market is really changing day to day, if you think about it, because so it behooves us to make this clear to our investors, to show the expectation of what's going on. So also you guys are well informed and well educated about what really is going on in the Southwest Florida Cape Coral investment market, because yeah, you're getting from the horse's mouth, if you will, because Justin is not only our network realtor, but he's also the property manager. So he has a pulse of the market. So he has some very important real-time information to share with our investors. And among some of the topics he could discuss in this mere 30-minute presentation, he could talk about, he could diffuse any kind of inaccurate information, any kind of misleading information that some people have been hearing out there from other YouTube channels. So we can get down to the real nitty-gritty, real information. So without further ado, Justin, he can share some great information about is there a real estate bubble, and what are the supply and demand. Which really, when Justin can talk about the supply demand situation, I call it, is not only a high school economics 101, it is grade school economics 101. Whenever you have demand exceeding supply, there aren't going to be any crash. Okay, I mean, you have to understand what's really going on in the market. So without further ado, Justin Zagwani, take it away.
Thank you, Mr. Yi. Yeah, I wanted to come on and talk about this. It's a question that I've probably answer every single day for the last month now. Everyone wants to know, is this a real estate bubble? And to put it simply, no, it's not. And they say, well, how could that be? The last time prices were going up this fast, and people were overpaying for homes, and cash offers were so important. It was 2006 and 2008. That was a huge bubble. This has to be a bubble, right? And well, no, this is a little different. And I wanted to take some time and go through it and really explain the differences between those two events, the crash of 08 and what's happening today, and kind of take a deeper look at it and give some good explanation behind that simple answer. So like Mr. Yi said, here it is, high school economics. We've all seen it, right? We have the supply lines. They're going to run this way. Right? This chart here is showing increased supply and decreased demand, and what that's doing to the price. We're gonna come back and forth as we talk about our little timeline here. We're gonna come back and forth to this basic supply and demand chart that we've all seen before. So what we're looking at here, this is the median sales price of homes sold in the United States. You're gonna see it goes all the way back here to the 60s. But what we're really looking at is this last portion of the chart here, right? The lead up, into the early to mid 2000s, this crash here, which happened between 2008 and 2010, and everything that's happened since then, leading us to right now, where we all know prices are going up incredibly fast. In the first quarter of the year in Southwest Florida, we saw sales prices go up 10%. In a quarter, not in a year, not in a 2-year period, in 3 months, they went up 10%, which is incredibly fast. But again, it's still supply and demand. This isn't a bubble. So let's go back to the lead up here, going back to that 2006, 2007 point. For those of you who haven't seen it, a great movie that explains this really well, it's The Big Short. If you haven't watched it, I highly recommend it. It's entertaining and it's going to teach you something. What was happening back then was more or less it was fraud, right? People were getting mortgages and buying properties they could not afford, right? So we're buying properties like crazy in this period between 2005 and 2007. So if we go back here, right, our supply more or less remained unchanged. So we're starting, let's say we're starting at this point here. Our supply, we're still staying on this supply line. However, our demand at that point was incredible. Everybody wanted to buy a home. Even if I already owned two, I was ready to go out and buy my third, fourth, fifth home, whatever it may be. I was putting no money down. The interest rates were low. It was great. I could get whatever I wanted. So demand is moving, from line 2 to line 1. And when we do that, our prices are going up. And that's what was happening. Prices were going up like crazy. Come back here to our chart. 2008 happens, the recession hits, people start losing jobs. We can't afford our 6 mortgages anymore that we all had 0% down on, and renters aren't paying, and foreclosures happened. And the amount of inventory on the market was incredible. I could go to any neighborhood I wanted. There were probably 15 homes that had been foreclosed on. I could buy whatever I wanted. It was all sitting there just waiting for me, and nobody was buying anything. So, here we are in 2008. Let's say we're starting at this point here. Our supply is moving, it's moving this way. I apologize. We have more supply. We had all of those foreclosures, and the demand was down. So our demand is moving here. So our price is dropping incredibly fast. We have way too many homes. We have very small number of people who can still buy them, and prices plummet, and they plummet like crazy. And we crossed a point. It's a point that I like to call rebuild value. So what's rebuild value? Rebuild value is the point where we can profitably build a home, right? Let's say we have a hypothetical 3-bedroom, 2-bath, 1,600 square feet, your basic starter home, right? Let's say that cost me $250,000 to build. Well, if the market says I can only sell it for $200,000, like the house next door, well, I can't build it. I'm not going to build something for 250, sell it for 200 and lose 50,000. That's crazy. So if you look between the period of 2008, 2015, very, very few homes were built. Nobody was building because it didn't make sense. Prices were too low. We can't build when every home in the market is for sale for lower prices than what we can build for. So after 2008, it took us 7 years to eat through that inventory. Finally, inventory got to a healthy level. We crossed that rebuild value. We can start building again. But everyone kind of slowly started building. It didn't happen quick. But that cause was a shortage. So let's go to 2019 now. 2019, we had about 1.4 million homes that we were short. That's inventory we needed to meet the demand that wasn't available, right? Let's go back to our chart here, supply and demand, right? So, let's say we're here, right? Our demand is creeping up, so we're moving to line 1, right? More people want to buy homes now. The economy is good after 2015. Everything's fine, right? Our supply is moving back. We don't have enough, right? Our prices are going to increase, right? If you look at the chart, that's what's happening. From 2015 here, we're going up, and we're going up quick. So now let's fast forward another year now to 2020, right? We all know about the population shifts that are happening. People are moving. Really, demand is at an all-time high, and supply is at its lowest inventory I've ever seen. My time in real estate. If you're lucky, some of our markets here in Southwest Florida have 3 months of supply, meaning that in the next 3 months, all the homes that are on the market will have sold. That number of homes will have sold, and that's generous. In some cases, there's maybe a month and a half worth of inventory. So very, very low inventory. We all know that there's buyers everywhere, right? Every home that goes on the market is getting 4, 5, 6 offers. So demand's at an all-time high. Again, if we were here, supply is going even further back, and demand is even going further this way. I mean, our prices are going way up, and that's what we're seeing right now. People say, well, if prices are going up so fast, it's got to be a bubble. And again, we come back to, well, not quite. Just because it might take years for the builders to catch up to 2 million home shortage, right? That's not something that's going to happen quickly. Eventually, when that demand reaches the supply, and we hit a nice point, we might see prices plateau, might see a small dip as demand, starts to be, answered by the inventory. But it's not going to just drop off unless we saw an event like 2008, where all of a sudden hundreds of thousands, if not millions of homes hit the market when they were foreclosed on. And again, there's nothing pointing to any signs that that's going to happen. It's just not there. So, again, assuming these market forces continue, prices are going to continue to rise for years. I mean, builders aren't going to catch up to a 2 million home shortage overnight. That's going to take a lot of time, especially with the shortages we're seeing in the supply chain right now. It just can't happen. So, prices are going to continue to rise for, in my opinion, several years to come before that supply is where it needs to be. And again, if we see a level off or a small dip, that's to be expected. But the homes that are available right now are performing very, very well. And me and Mr. Yee spoke about that yesterday. He knows about the Southwest Florida market, and really the fact that at this point, new construction is the deal to be had. It's cheaper than buying resale at this point, which is incredible. And it just points to how high that demand really is right now. It's an interesting case study to look at. But again, there are some very key differences between what happened in 2008 and what's happening today, and what leads most industry experts to believe this is different than a bubble. It's supply and demand and prices increasing. Mr. You want to send it back over to you and kind of get your thoughts on it?
Yeah, not only that, as a real estate investors, you need to understand this. As long as when you buy a home, when you buy investment property, you need to have a long-term approach. I mean, coming on historical basis, prices, may go, slight uptick, up and down, whatever. But if you invest for the long term, which is no different than the stock market. If you invest for the long term, you can overcome any kind of corrections. But also in this Southwest Florida market, we also look at the numbers. I look at the rent to value ratio, and I mean, you have to think about it. If we are selling single family home, residential homes for our investors, for example, at $280,000 or even $300,000, you cannot look at the price by itself to determine whether it's a good purchase or not as an investor. You have to look at the rent that we're able to command. Not only the rent you can collect from this kind of property, but how long we can sustain. Is the rent going to catch up with the rising prices? So in this Southwest Florida market, Justin and I clearly will agree, yes, that's the case. Let me give you an example, and Justin can validate that because Justin is on the ground. He's right there in Southwest Florida, Cape Coral. But on a $280,000 or $300,000 single family home that our investors are buying, you're getting rent of $2,100 to $2,200. Think about the numbers, okay? So if we, at a interest rate of 3.5%, if you put 25% down payment, then you minus all the monthly debt obligations, your mortgage taxes, insurance, property management fee, and all that, you're still going to have a positive cash flow of at least $300. So the next question you're going to ask is, how come we're getting such a high rent, $2,200? How come those people are not buying themselves? Well, there are several reasons. One of them is because of a shortage of homes. They can't buy. Those people moving from out of town, from all over the country into Cape Coral to move there to find a job. There's not enough homes for everybody to buy. So those people move in Cape Coral. They have to rent. Those people making like $80,000, $100,000. They'd be more than happy to pay you $2,200 to rent your home for at least a year, 2 or 3 years before, maybe a few years down the road before they can buy, if they want to buy. So we have plenty of renters that can pay $2,200 or even more later on, the rent is increasing in Cape Coral because you have very high quality people that have good jobs are moving to Cape Coral for a lot of reasons, for job, population growth, lifestyle, retirement, and millennials are moving to Cape Coral. And so this is just like Justin said, there's not enough homes. The sellers are not selling their homes because if a seller in Cape Coral or anywhere in the country for that matter, if they sell, would they sell their homes at a good price, don't get me wrong, they can sell it at a good price, but then they will go back in a buyer's market and there's no homes for them to buy. So people, they don't want to sell. Even people in forbearance, I don't know, we hear that a lot of people who have not paid their mortgages, this past pandemic, and but a lot of those homes they have equity, so they're not going to, the homes, most of the homes in forbearance, they're not going to get foreclosed because people have equity in their homes. If they want to sell, they can sell it at a profit. But a lot of those sellers, they're not selling. So this supply and demand, huge difference. It will continue, and the builders are not building. In fact, some of Justin, you can validate that some of the builders are not building because of the skyrocketing lumber prices. They are pausing. They are temporarily pausing building until the lumber prices go back down again. Who knows when that's going to happen? So, not enough supply of homes for new builders. The sellers are not really selling as much as they need to. So there's a big disparity. Like Justin said, there will be several more years of demand exceeding supply. So the prices will continue to go up. I mean, that's yeah. High school economics 101, okay? If you learn nothing else from this presentation, you can learn about this. Whenever demand are greater than supply, the housing prices will go up, consistently. So as an investor, now is a good time to pull the trigger because the rental market is so strong. You're getting a good return. You're getting equity growth. I mean, what more do you want? So, I mean, and Justin, because he does what he does, he are able to get you the homes. It's not going to be easy. Justin have relationship with local builders that will supply our investors with homes, which is a very, very hard to get. So sorry, I spent so much time to talk about it. So if you can conclude the next 5 minutes, Justin, see what you have to say.
I mean, like you said, we have a couple builders we work with here locally. They're great. They're large builders. That's what allows them, is allowing them to continue to build, right? A lot of the small, very, very local builders, maybe build 10 homes a year. They can't keep up with these prices. They can't build profitably. We work with large builders that are building hundreds of homes a year, have a great reputation, great liability. And because of that, that's what's keeping them building at great prices. We have homes available. Let's say prices continue to rise, right? Let's say, because contracts aren't happening, right? We reserve lots right now. The contracts aren't going to come for, 4, 6, 8, maybe 10 weeks once we reserve the lot. They're waiting till they hit a certain point in construction before they even give us that contract to sign. They have for a couple of reasons. One, they want to make sure that the price they give us is accurate. They don't want us, having any type of problem. They don't put a price adjustment clause in their contracts. A lot of builders, there's gonna be a clause right there that says, if our supplies go up like crazy, we're gonna pass that price increase right along to you as a buyer. And talk about a terrible situation to be in. We've been under contract for months and we're ready to buy, and all of a sudden we're finding out now prices are going up. It's not ideal. The builder we work with in Cape Coral, that doesn't exist. Once we sign that contract, that's the price, and we're closing at that price. And because of that, they want to wait until they're through the point where most of that lumber is ordered to make sure that the price is accurate. That being said, let's say prices continue to rise. By the time we get those contracts, prices are $320, $325. That's fine. Because we're waiting for that new construction, we're walking into $20,000, $30,000 of equity. There are homes built in 2018 of the exact same model that have sold for as high as $350,000. So that's great news. We're walking into instant equity because we waited for new construction instead of buying something that was ready right now today. In addition, rent is continuing to go up, right? When we had these, initial webinars about Cape Coral, we said the average rent for a 3-bedroom home was $1,800, and the average rent for a 4-bedroom home was $2,000. Well, fast forward about 3 months, and I can tell you it's $1,900 is about average for a 3-bedroom home, and $2,100 is average for a 4-bedroom home. Prices are going up because there's so many quality renters out there. We get to be selective. We get to charge top dollar, and it really is a great situation, to walk into as an investor. Knowing that you're going to make that cash flow for several years, and I mean, look at the chart on the screen right now. You can't find me a 10-year period where you would have missed out as an investor, right? If I buy, I rent it out, make cash flow for 10 years, and I choose to sell 10 years down the road, you can't find a point on that chart where you didn't make money in equity. That's really kind of the beauty of real estate. It continues to climb on a long-term basis, which is great news for any investor in this market.
Yeah, Justin, you're right. A number of investors of ours you're working with very closely, and it's good that you are informing them of what's really going on. There's no need to panic. There's just be patient. Just work with you because you have a connection to the great builders. Because I can tell you there are other builders in other part of the country whereby they are messing up their buyers. They increase their prices. They have this, what's that name of the clause? The escalation clause. Yeah, that's right. Yeah. So some builders are very unethical. When someone sign put an earnest deposit to lock in the price, some builders in other part of the country, they have an escalation clause where they can increase their prices during the construction of the home. So that really, screw the buyer, not screw the buyer, screw the buyers, not our buyers, because you work with ethical builders in your market. So that's very reassuring, very good to know. So awesome. So so before we finish with the 5 more minutes, whatever or less. So what kind of inventory you have moving forward? I mean, for the next few months. I know we talk about the single family home, 280K, 300K, 3-bedroom, 2-bath, maybe 4-bedroom, 3-bath, 2-bath, whatever in Cape Coral. What other product do you have that's in right now, actually, in between now and next few months? What are you working on? Yeah,
we're always working on new projects to bring to our investors, and sometimes it happens fast, which is why I always, when I first speak to an investor, I always tell them the most important thing to do is become comfortable with investing in Southwest Florida. Make sure that that the Southwest Florida market is right for your goals. The exact project that you go under contract on, it can change, right? I might have something come available for a day, and we kind of need to know, is this something you want to do or not? Just be comfortable with the market and be ready for those potential surprises, because sometimes stuff happens quick. Moving forward long term, we know that we have the 4-bedroom, 2-bath in Cape Coral. It's performing very well. Do have one duplex in Cape Coral that's going to be available in about August. 3-bedroom, 2-bath for each side. Those perform very well. They rent out very, very quickly, and the tenants are excellent. Very, very strong tenants applying for those units. There is a community in Naples with some townhomes. They perform well. Cash flow on those is a little bit tighter than what we see in Cape Coral, but the main reason is that appreciation potential. This is a potential purchase in the Naples market in the low 300s, which is rare to come by. Majority of the purchases in that market are going to be $400,000, $500,000, $600,000. So to be able to be in this location in Naples at that price, there's always going to be demand, to sell it someday, which means appreciation is great. And we did have one. By the time this video gets released, it's most likely going to be sold. But we did have one home come available in Labelle today. Builder called me first. It's not even officially on the market. They haven't even actually officially canceled the contract, but someone else's buyer fell through. This home is available. I got the call. So $228,000 for a 4-bedroom, 2-bath home, comfortably rents out at $1,600, creates a couple $100 of cash flow there. And I mean, Mr. Yee knows investors have been purchasing in that market for a couple years now from his network. And that 4-bedroom home, if we went back 2-3 years, probably $180,000, $190,000. We're up to the upper 220s at this point, right? 228. Prices are going up very quick, so we know appreciation potential is phenomenal in that market, and the tenants perform really well. So, that's one of those surprise opportunities that came up, which is why it's important to get in touch with us early and really be ready for those. But we'll see what else comes up. I'm sure we'll have more projects like that come up quickly, and we always do have some inventory available. Just again, takes a little bit of patience, a little bit of time, but the opportunities are great, even in a crazy market like this.
Yep, Justin, I totally agree. I mean, I bought my first rental property in Cape Coral back in 2003, as a matter of fact. So I know all about this market. A lot of people does not know there's almost 1 million people in Southwest Florida area, Cape Coral, Lehigh Acres, Fort Myers, and Naples. And it's a big region. It's growing into the suburb. It's really reaching out. So we have a good job growth, diversification, a lot of good industry, a lot of millennials going there, a lot of retirees going in to retire, a lot of vacationers come from the cold weather area to vacation, great outdoor activities. It's just a beautiful, beautiful area. All new things, new houses, new hotels, new amenities. I mean, new commercial buildings. I mean, it's growing so fast. So it's really somewhat under the radar, but not to investors. So this is a good long-term growth area. The population growth, job growth, a lot of people migrating from the Northeast and from other part of the country into Cape Coral because of the quality of life, affordable at least for right now. So the demands are much higher than supply. So investors have to be ready to pull the trigger, when you enter this market. So you got to be ready with your loan approval. You got to put all your ducks in order. And Justin works very hard with our investors to find our investors a limited amount of great inventories available. But it's all about pulling the trigger because the demands are so high and the market is appreciating. This is an equity play. You get, decent cash flow, not great cash flow, but it's all about equity play. That's how you make money as a real estate investor, is through equity growth, not necessarily purely on cash flow, right? So you have to know how to play the game these days moving forward. Okay, so any one quick last minute, Justin, before we conclude this presentation?
Yeah, I mean, that's exactly it. If you have any interest in the Southwest Florida market, the best thing you do is get in touch with Mr. Yee. He's going to make sure that you have all of your ducks in a row and you're ready to go. At that point, he's going to get you in touch with me. We're going to start discussing the market, the opportunities that are available. And like I said, sometimes those opportunities come really quick. So being in touch with us and being on that list is important, so that we know to reach out when those opportunities do come. And there are still some really, really strong opportunities that I'm hoping a lot of these investors from Mr. Yee's group really take advantage of. Yep,
definitely. I'm very bullish on your market, and I will supply you with some very motivated investors for you. So we can invite Justin back in a few weeks because things change so much, so exciting to work with you, Justin. You've been so good to our investors. You provide outstanding client service. You've been providing outstanding property management services. Thank you so much for helping our investors. Thank you everyone for listening. I'll talk to you guys later. This is Siwei Yee from the Yee Real Estate Network. Thank you very much. Have a nice day. Bye-bye, everyone.